Okay, good morning, everybody. All right, today there's a lot of fundamentals. Sorry, I'll put it this way. Let me change the words. There's a lot of economic 101 indicators, okay, to share with you today. So some of the indicators itself, right, you may like it. Some of the indicators you may not like it. Some indicators itself is going to be like, I heard this before, but it never worked. So you will have such a feeling today. But the point is this. In history, ever since 1900 until today, all right, these indicators has been there for long enough. And of course, whenever things happen, they will bring it up and inform you that, hey, this is the indicator, this is what happened, and you should have take notice of that, and so forth. You got my point? So end of the day is this. When the market is going hot, there's no need for any indicators. When the market is going crazy, insane, no need to have any indicators. No need fundamentals, no need technical. You just have to follow, right? Follow the trend. It is only at the top where the music stops, okay? Then people will realize that how important those indicators were. But don't you agree with me that when the market is insane or the market is at the very euphorial level, indicators is never important. If you agree with me, please key the word agree. If you disagree, please key disagree, all right? Okay, I can see that more of you agree. Okay, hold on. Okay, all right. All right, so indeed, since that most of you agree, then you understand why itself right now. You can understand why Michael Burry, okay, the guy who shorted the US market back then in the Lehman crisis, now why is he offline? He has already made it official. He will not give any more market information. He will not tell you anything about market because to his opinion, because a little bit of a cranky fella, okay, his thought is very clear. I told you guys back then, you don't believe me. You said that I didn't tell you. Now I tell you again, but you still don't believe me. So it's pointless to continue, all right? So basically, this is what his feeling is, and I probably had the same feeling too. And that's why today, these indicators I'm going to share with you. I want to do it one more time, and that's it. I will not bring it up again because I think it's pointless to keep on bringing the same thing and keep on warning. And end of the day is that people will not appreciate because, well, warning is one, but what happened next? It's just like telling you when you are young, when your mom and dad tell you not to dash across the road. And you remember this warning, right? But apparently itself, right, since there's no cars on the road, everything looks good, why not then? But when you do that itself, right, you get this excitement, this adrenaline rush, but suddenly maybe a left turning, a car speed down, and that's it. So end of the day is that warning is important, but it also comes along with reality and practicality. So you have to put them together. And if the warning is already there, then you just be careful until the thing really happens. And if the thing really happens, then the warning that you had earlier beforehand will come nicely and you can react upon it itself. Okay. So today there's a lot of financial indicators for you. A lot of them, not technical indicators, is financial indicators, basically telling you the market is being way overvalued. But again, seriously, no one really cares, right? So it's just like this cartoon itself, right, about inflation. Now, initially, inflation will be small when the economy is doing okay. But when inflation starts to grow, because it actually sucks it from the economy, there'll be a point whereby inflation will go so big and the economy cannot hold on it. And that is where one side has to give in. And of course, usually itself, right, the economy is the one that suffers. So that's the reason why Economic 101 is so important. But when it comes to Federal Reserve itself, right, they don't really do that. Federal Reserve, what they do is that they actually do something like this, okay? Look at it. What do you think this picture tells you, right? Just in case. That's what do you think, guys? What do you think this picture tells you about the central banks putting out a fire? Now they are firemen, right? They're supposed to bring down the fire. Okay, that's in this case, right? But why is the fire burning? It's because they are using gas, which is actually the one that are going to be burning faster, right? So of course, there's two sides of coin on this particular cartoon. Okay, some will say, okay, Federal is an arsonist, so they're actually killing the market. Okay, that's one side of it. I got another view on this, a little bit skewed view, but I felt that, right, what they are doing is they are doing it on purpose. Is to really pour more oil or gas into the burning fire and then let it burn faster, and then they can restart the whole thing again. Now, of course, different, sorry. Oh, my view is on share. Oh, so sorry. Oh my God, sorry. Sorry. Oh dear. Hold on, did not share. How come? Sorry. Oh, okay. Let me repeat myself. Okay. Okay, guys. I seen. Oh, no wonder. Okay. Today I try not to have my handphone with me, but since can't be done. Okay, so I'm trying to say this is the inflation joke. That's now. I think I need to go through myself one more time, but this is how the inflation jokes looks like. Okay, and then after that, this is the Federal Reserve. Okay, this is the Federal Reserve putting out fire with the gas. So going back again, I mean, you heard me just now. What I'm trying to say is that the other very skewed view, a dark view, is that to me, Federal Reserve are not idiot people. In fact, they have 900 over smart scholars are inside the building, okay, giving them all the advices, going through the economic data. I'm sure they are way, way, way above us. So the question is that if you're so high above there, don't they know the problem there? I beg to differ. I think they know. And because they know, and they know it that for the years and years, human can't change, right? So rather than change human being or educate them, just do the same thing repeatedly over and over again. Anyway, they say, right, the participant will change, but the mentality will be the same. So in my opinion, it's all right, Federal Reserve, they know what is going to happen. They know exactly, but rather than to explain themselves, why not just increase the speed? All right. So if you heard me and you agree what I just say, just you can put the word agree. Okay. All right. Sorry, apology for that's not the little fiasco with the cartoons. All right. Okay. So disclaimer as usual, please understand this. Whatever I share today and beyond, please understand that it is all my personal opinion. Obviously, I'm digging my own perspective here to share it with you. And my job is to just translate and inform you how I see the market from my personal perspective. All right. If you're not, you do not agree with that, or you think that, right, whatever I say is a bit too skewed, it doesn't matter. End of the day, you make your financial responsibility and do your risk management, all right? Okay, so we can see very clearly it's right, the US dollar, okay, the US dollar has came down yesterday. The US dollar came down. Some people are saying that because that it is the COVID bill is being out, so there will be a lot of money flooding the market. Hence, therefore, right, that's why the dollar depreciate in value. So that's one reason. Okay, some people says that, right, because the economy is right, it's not going as fast as it is, so there shouldn't be any more buying on the US dollar. So I'll leave it down there. But we can see very clearly the US 10-year Treasury notes actually went up. Okay, it was down initially from the week earlier of the week, and yesterday it bottomed out at 1.48%. And then it climbed above to 1.5%. All right. And I told you guys 1.54 is a very critical level, which I think the market seemed to know it. It's been holding at 1.54 rate for quite a while itself. So if the market can cross above 1.54, then that will be a very important point to watch out for. Okay. So this is US dollar versus the 10-year yields. Okay. Now we talk about economic 101 first. So obviously we all know the fact of figures is that when you do this, when you can see that the ECB balance sheet itself, right, is going so high last year to this year, you can see that it went up obviously from 2014 to 2019. We know that Draghi was actually into this. But the last 2 years, look at the way it went up. It was parabolic upside, right? And of course, think about this. When there's so much supply in the market, what will normally happen to the currency? So obviously the currency will depreciate. Now, what if the US dollar is rising at the same time? Then what will happen? So I'm going to tell you up front here, my personal view is this. If the supply of the ECB from balance sheet continue to go up in this manner, and if the US dollar really start to recover because of economic recovery or because of the interest rate yields, then I can tell you this, it's very simple. You look at how to trade the euro. Now look at the euro the last few weeks. I've been telling my friends, and I'm going to repeat this to you if you didn't notice this, is that you look at euro, if I had to concentrate on doing CCYR trade, yellow to red, I will make more money than I buy euro. Can you see that? Can you see that? So I'm going to be right up front here, guys. This is going to be the first value trading tip for you, okay, this morning. Is that now, if let's say economically we believe that the US dollar is going to go up, then obviously itself, right? Obviously the currencies like euro will be coming down, okay? So this particular trade, why do I want to mention this? Because now you can see that the euro has crept up again from the bottom, but after that, before that, it sold down, right? So at the moment now, the KSI is green in color and the market is recovering, you don't touch. But I'm going to give you the tip of today is that if the euro later on, okay, if the euro goes, hold on, let me just put up my annotate. Right, if the euro basically goes up and pull back down with a CCYR, okay, I believe that euro will be coming down and euro will go down lower than the current price, the low of 1.8 level. Okay, I believe that it will go lower than 1.8. And of course, if the KSI turn to red in color, that will be even more, it will confirm the selling even more. So my personal take for you on euro is that you can see the nearest chocolate bar itself could be this guy here, if not this guy here. So that's a 1.77 level, okay? So my personal take is this, because of the way the ECB is doing right now, then it's very clear that there's a chance of seeing euro going down to 1.77 level or 200 to 300 pips from here. Of course, again, you have to follow rules, wait for the CCYR, and you go with it, okay? So that's the first tip for you guys in the morning. Hey, sorry. 1.17. Oh my God. Okay, sorry. 1.17, 1.18. Yeah, correct. Gosh. Okay, so I'm basically mixed up the number again. I'm referring to 1.18 for the euro and 1.17. Okay, these two levels. 1.18, I believe you'll break below it, and it should be going down to 1.17. Okay, so guys, this is the euro for you for this morning. Okay, apology for that little typo there. Okay, thank you guys for informing that. Okay, so first tip of the day given to you already. Okay, let's continue. So Joe Biden, Joe Biden has signed the 1.9 trillion COVID relief bill. So that is probably the reason why you see the dollar coming off, right? Okay, so now this is very simple. You say, Kel, but then it's 1.9 trillion coming into the market and the dollar come down. Then how can you validate what you said earlier? Now, my point is simple, guys. You cannot compare immediate reaction. So that's why you can see the euro went up last 2 days because of this COVID relief bill. But after this COVID relief bill is over and the market still thinks that if the US dollar is still in good demand because of the interest rate value, then what happened later on will be that if you see the US dollar start to recover again, okay, that is where it will react onto the euro, you understand? So it's not like say that, oh, today 1.9 trillion in the market already, then the dollar had to fall all the way. Not necessary. So that's the reason why I want to tell you that now this thing have been signed. So when will they reach everybody's pocket? So apparently it's all right, according to the White House, they're saying that people get it by this weekend. Wow, this weekend already people receive money through directly TT to their bank account. So that means that Monday morning, would there be a lot of buying on the stock market? I think relatively will. I mean, $1,004, maybe take out $1,000 to punt into the option market. Why not, right? So this is going to be the usual position that what the market believe. But I always tell you this. When everybody tells you that the market will be going up on Monday, I will always want to look in the market and wait. If the market stays above OP, I will be buying. If the market stays below OP, instead of buying, I might be selling. You got an idea now? So that is what's going to happen. Because there's still a lot of people actually are out of job or they still need the benefit lah. $1,400 really doesn't really do much. It will do something, but not much. Okay, because the inflation in America is quite heavy at this moment right now. All right. Anyway, you can see that now without a Republican vote, this thing go through, right? So obviously, it's anything from Biden, as long as it's from the House, it will just go through. Okay, it doesn't really matter anymore. All right, now the COVID variant danger in UK. Now apparently it's out again. I do not want to cover COVID, but apparently this is so big in the financial market, so I might just talk about this. So apparently the COVID variant first found in UK now appears to be 64% more deadly than the earlier strain. Wow, 64% deadlier than the earlier strain. So of course that means that the chance of people, getting hit and pass on is high, right? So that's why I will still have to tell you guys that, just be very, very careful, okay? Of course, there's no spreading to Singapore yet. There's thank God for this. But for our friends overseas or near UK, please be very careful. You need to take note that this is no joke, all right, guys? Okay, now this is usually we do all the technical stuff at the back, right? But today, because of time, I want to share this with you. Okay, I want to share this with you about how to do Economic 101. Now, first of all, this is the current PE ratio. Current PE ratio is 40.11. Now, PE ratio, because of the computation, there is a variant, also the variety of numbers at the moment. Now, I see 40, I see 42, I see 44. All right, from Wall Street Journal, it's about 44 to 45. So, of course, I take the lowest number to show it to you, the lowest number, okay? So, the lowest number now I have on screen is 40.11, okay? 40.11. And that is based on the latest Thursday, March 2021 number, okay? Why is this 11? Okay. Okay, I think there's some typo there. Okay, or this is the way to put it wrong. I think typo there. Okay, anyway, this is the latest. Oh, sorry, I don't think it's the latest. Okay, wait a minute. Okay, yeah. Still, okay, sorry. This is the latest. Correct. So for 40.11. Okay, so you can see overall itself in terms of the PE ratio, all along itself, right? We have 25. That was the high point. That was back in the 1899. The 1890s time, okay, 1890s is so long ago, okay, and then of course the recent one is during the dot-com crisis, and the last one was also during the Lehman crisis, okay. So we are talking about, we are near again to where we happened back in the 1999 NASDAQ crisis. So traders, this is one way to look at it, but of course some people say no, we have higher than that, so maybe we have way higher. Now I'd like to repeat this myself, okay? I know that you may hear this many times, but I want to explain this to you. Now back then itself, the Dow Jones high was about 10,000, okay? That is something to take note of. Then the last high here was about 14,000, okay? You must understand. So the last two times when this thing happened, where the indicator was more than 35, okay, to make it a higher point, 35, the threshold, or 40 as a threshold, okay, right? The Dow Jones was at 10,000 and 14,000, but to date itself, right, the Dow Jones is at 32,000. Seriously, it doesn't really match, okay? It doesn't really match here itself. So my point is this: I'm not expecting the Dow to crash down to 14,000, but I think that a significant pullback will be on the dot, okay, on the table. So you just have to take notice of this, because you don't want to after many years later when things really happen and say, oh yes, I was there and I miss it and all those stuff. I don't think it's worth to do all this thing when, no point of regret. You want to do things in life itself, you just know what you're supposed to do and you just stand by. I'm not saying the market will crash, but I'm telling you that we are now at a very incredible point here. Okay, so now this is the what do you call the PE ratio with economic crisis. Okay, let me just explain to you how does it work again. All right, so you can see that whenever the PE ratio goes up, right, you can see at this junction here, the gray area means that this is there's a recession. And you can see that whenever the PE ratio start to go into the recession, meaning from here, let's take a look here. From this point, it went up, right? And the moment it goes up, it hit the recession level, right? You can see it continue to move a bit higher, right? Usually it go a bit higher. Example, this one, it enters recession here, okay? But it still continue to go a bit higher before the market eventually pull back. So that means that recession is always on the board, on the point whereby the PE ratio goes higher. So it may drag a bit more time, but it's always repeating. So what I'm trying to say is that, right, we are in recession, but apparently itself, Federal Reserve sees no point, and they say that no worries, inflation may continue and stuff like that. So we are actually in a crossroad whereby you have a danger, but apparently it's all right. The Dow is, the Federal Reserve doesn't really care about this. So you have to take your own responsibility or yourself, okay? Because you don't want to come back again and say, oh, guy, I saw it before. Next time I will know what to do. I think that's very, very silly, okay? So that's the reason why today I want to spend a lot of more time to go through this economic 101 with you. And that's it. After this itself, I will not talk about this anymore because it's pointless already by then, okay? Got an idea now? All right, continue. So now I'll give you the easier way to understand this and in terms of market valuation and stuff. Though this morning I do a lot of research for you guys. I did a lot of research from early as 4, 5 a.m. I'm up ready. I was doing a lot of research for you guys, going through different areas to just present this to you. Okay, so in simple point, okay, if the PE ratio is below 10, if the PE ratio is below 10, that means the stocks are undervalued or extremely undervalued. Now, this is a good time to buy stocks. Now, the thing is this, when it happened, you can look at the point here itself. Okay, the last time this happened was in 1980s. Okay, 1980s, I just born. Okay, I born 1979. Then the previous time was in 1950s. Okay, that's where my mom is not even born yet. Okay, then after that, it went back all the way to 1918. That's where I think just finished World War I. So the point is that you can see in cyclical point. Let me just do a bit of doing here 18. If I do this as 18, I do this at maybe 48. Okay, just to give a rough idea. So this is about 30 years. All right, 30 years. So this one, we are talking about probably about maybe 78. So which means that it's about 30 years. So forcefully, I'm trying to basically do it. So do us a favor, right? 78 plus 30. 78 plus 30, what do you get? Incredible, right? 78 plus 30, you will get another, it'll be, what year is that? 08. And that it's a good time, right? Imagine at 08, you to buy shares as well, right? You will actually made a lot of money, correct or not? Okay, so the idea now, you see. So the next one is 30 years later, which is at 48. Okay, wow, 48. So second tip of the day, okay, in 2048, then you buy shares. Okay, so think about this. If from now it's 2022, okay, we have about 26 years more to go to reach 2048. So obviously now the Dow Jones is at a high. So think about this, what will technically must happen towards 2048. So I know this is way, right? Maybe, right, guys, if we are all still around in 2048, remind me to buy stocks, okay? That's like 30 years later. That's how old am I? Wow, I'll be 82 years old. I think I just retired, okay? All right, this is really incredible, okay? Anyway, okay, so that is super undervalued, okay? Cyclical pattern. Okay, I take that away. Very cool, right? This sharing today. Today is a very good day. All right. A lot of things in life is very cool. You just have to know what to do with it. Buy 4D better. Okay, so now the thing is fair value. Fair value is much more clearer. Now, fair value is about around 12 to 14 period. And the last time we saw something like this, wow, it was in 2012, okay, about 2012 period. That was where the fair value hit 14. Okay, that was a time to buy shares, and if you have bought that again, it was a very good time and you make money. So write it down, 2014. Okay, 2014. So if you look at it a little bit to the back on this point here itself, the last time this happened, okay, just do a bit of playing around with it. It's about 94, year 94. So the difference is between them itself about 20 years, a bit shorter, right? So 20 years itself, what would that be? 20 years. Okay, that will be 2034, right? So it's again very far, right? So again, you can think about that. Okay, but what I'm trying to say is, well, every time when the market went about too high for acceptance itself, right? Okay, it's really dangerous, really scary, and also reckless to buy shares. So of course, some people have been asking me, Cal, you see, the thing is that many trainers, gurus, experts are calling for buy right now, to buy this, buy that. And you guys here is warning and warning, warning. That's why you guys don't have the eyeball rate for people, because people want to hear is how to make 10 times, 20 times of their profits. And you guys are talking about careful, be careful, and be careful. So end of the day, that's why your community is not growing as fast. Well, let me put it this way, okay? I'm not too sure about which expert are you referring to, but again, I'm in this industry for 22 years or more, and I've seen this enough, and this our cyclical pattern repeats regularly on itself, all right? Regularly. So end of the day is, do you want to take that risk? So I'm not going to say, you know, whether I'm right or wrong. End of the day, you make your final decision, okay? I'm just going to tell you that to buy stocks at now is insane, because I even saw Roblox, right? The new IPO. I mean, seriously itself, my son played this game. I really don't like it because I find that the 3D graphic is terrible and it's very headache to the eye, I'll put it this way. But she likes it. He likes it, okay? And this company now is worth $48 billion. I was like, wow, okay. So that's why I say computer games is a new thing in the market, right? So I'm not going to say whatever, but if you really think about this, if next time, if the market ever pull back for whatever reason, if the PE ratio is 14 or below, please buy as many stock as possible, okay? All right, buy as many as possible, because history has proven that these are the best time to buy stocks, okay? But of course, by the time that happened itself, right, a lot of people say, no, this is the worst time to buy stocks, don't buy it, and stuff like that. And again, the whole thing will repeat on its own, okay? So got it? If you got it itself, right, can you keyword GOT space IT, got it? Right into the group chat. I'll take some water. All right, now today is a lot of fundamental economic 101 sharing like this. If you don't like it itself, you can just turn off now, because there's more to go, and you can watch this later. All right, you know what technical analysis is coming up very soon at about 9:13. I will do the technical analysis for the Dow Jones, for the Hang Seng and stuff like that. All right, because yesterday, you know, I was a little bit, you know, distracted because there were so many messages coming in, texting me, Cal, what happened? Why is this? Why is that? And I like, what? Okay. First of all, I did not say the market will crash. Okay, I never said that at all. But the thing is that individuals, they do short selling, and of course, when the market go to all-time high itself, right, it's very normal to get into a perplexed mode, because you know that it's overvalued, but people still. But the thing is that people shorted, right? They get a bit worried. They said, "Hey, Cal, it's so high now. Would it go higher? Would it go to 33,000? Or it go to 35,000?" I said, "Huh." Okay. First of all, I did not call for sell yesterday, so I'm not too sure what happened. All right, but today, listen to me. Today, I am. Today I am, because today the Dow Jones basically went to 32,500, and I told you before, every 500 is a milestone, and 32,500 is really a number that really been in my mind for longest of a while. Not 33, not 34, but 32.5. So I'm going to say this upfront to everybody online today, is that I believe that today 32.5, this figure will be a very critical level. If the Dow can stay above 32.5, no problem, upside. But the Dow stay below 32.5, I will shift myself more towards the sell side, okay? 32.5, okay? I'm going to put it down for you guys right into the group chat right now. Okay, I got it. I put it in the group chat already, 32.5 K, obviously, as a key pivotal point. Today, I'm telling you, okay, today, right? Okay. All right. So, of course, some people say that, Cal, but this P ratio, is it really trustable? I put it this way, economic 101, okay? But of course, then again, there's another indicator called a Shiller PE ratio, right? And this Shiller PE ratio, why is it being utilized in this market? Because Professor Robert Shiller, he is a professor in Yale University. Now, he invented the Shiller PE ratio to measure the market valuation. His point is this: his indicator is much more reasonable for market valuation indication, because it eliminates, okay, fluctuation of ratio caused by the variation of profit margin during business cycle. Indeed, it's because during business cycle, right, there's a form of people like to inflate inflate profit margins. Okay, this is very, very normal, okay, especially in America. So that's why he don't think it's fair nor it's justifiable with that. So he created his own idea. Now the formula, I went through it, it's pretty good, but of course it's too taxing and complex to share it here. So in short itself, right, he backtests this and push it forward again. Now there were there's 3 areas to take note. Now again, now it's a bit different. His one is about 1928. 1928, there was once where the PE ratio went 32, and then after that, the market collapsed. That's what happened in 1829. Then after that itself, right, he did another one that was back in 1999. Okay, in 1999. So you see, you realize that he didn't have the big spike later on in the Lehman crisis. He doesn't have that. Okay, it doesn't have that. But apparently, it's right. The same thing is that when it crossed the 32 marker, right? That's in 1999 to year 2000. After that, the market collapsed, as we all know. So the point I'm trying to explain to you now is that we are now back above 32, and we are 35.6. It's even higher back in 1928. So which means that now we are talking about almost the same level what happened in 1999. And we know that the time itself was a NASDAQ crisis where the market was so crazy on the NASDAQ.com bubble, and obviously what happened was terrible. The NASDAQ dropped from 6,000 point to 1,000 point later, right? So are we having the same thing now, like SPAC, all the GameStop mania, and IPOs going crazy, even though the earnings is not there? Yes, we are actually seeing the same thing exactly happening right now. So that's the reason why today I commit myself to talk to you all this, because I don't want to come back again to talk about this, because I know that what will happen soon, not immediately, soon, but if you don't want to take my advice, it's fine. End of the day, you make your own choice, okay? So of course, if you still don't believe the PE ratio, you don't believe in this Professor Shiller because he's not a billionaire, then you trust a billionaire. Okay, Warren Buffett has become the 6th richest man on earth, and he's the only investor that is in the top 6 list. Okay, he has crossed 100 billion. But if you look at how much he has been giving to charity, honestly, he has given more than to be at the world level already. He should be way number 1 spot long time ago. You know, Jeff Bezos will not be near there, right? Not even Elon Musk. But the thing is this, that's why probably why it's 9 years. So because he's done so much good deed in the world. So now he's telling you about the market valuation. Now he has stopped using this indicator. He has stopped. Yeah, indeed, he really stopped, because he knows that it's also pointless, because the Federal Reserve is pouring so much into the market. All right. Anyway, just to let you know, the Buffett indicator that he used, he says that, this Guru Focus says that it's significantly overvalued. Significantly overvalued, okay? And how much is overvalued? Well, it's overvalued by a lot, because now it's at 194.7%. Okay, and because of that itself, right, that means the S&P should be actually giving a negative. Okay, now this is something I want to explain this to you, okay? The 10-year yields now is going 1.5%. We all know that, right? And if let's say now later on, because of this, because the GDP figures now is at the lower end and the price is higher end, when you do a division of that itself, that will give you a negative return. So if you're having that itself, and if the bond yield is 1.5% is a positive, right, then what will naturally happen is people will start to move away from equity market to return to the bond market, because whichever safer, they can promise return, whichever will be the best one to take on. And I'll explain this more in detail after the technical analysis, because I'll tell you why gold price might be going down lower because of what Federal Reserve say. Okay, so hang on until the last part if you want to hear me more about gold trading or gold investment versus the Dow and the Federal Reserve. It's going to be very exciting for today. So you can see at the moment now, right, all along for the last few years, from 2002 to 2010, the TMC over GDP and the TMC over GDP plus Federal Reserve have been always about there. They're like tied to the belt, right? But recently it's out, they diverge each other, very huge difference. And of course, this is actually a very big alarm, because why? You can understand this when you're pumping so much money into the system itself, the inflation of the prices and stuff like that will basically pull reality away. So that is the reason why, again, traders, you must be careful, because this is something that Warren Buffett had used before, and he always been saying that it's a pretty good indicator. You can think about this. By the end of the day, it's again a warning. Whether do you buy it is another. Okay, now please don't think that, oh, Cal again rhetoric about this bear market coming soon or coming now or even now, and after the Dow Jones go to 33,000, 35,000. Okay, I'm not saying that. Okay, please don't take and twist my words. I'm just informing you. being a responsible trader and analyst in my own rights, I'm sharing things with you, and I will tell you guys I will not repeat this ever again until the market reacts. Okay, so guys, this is a very important warning for the 12th of March 2021. I really hope that you will take it from the point of warning. I didn't say that the market will crash, but I'm just telling you today to be today to watch the market. Okay. Then, of course, you can see this is the Wilshire 5,000 over GDP. And again, now this is absolutely nuts. Okay, this one's even crazier. The last time when this happened is when the Wilshire 5,000 over GDP, it was at a high level. It was a year 1999. So we understand that. But now we are even higher than 1999. Oh my God, we are now way higher by 0.3, which is about 30% higher from the last time this happened. So seriously, we are in a very, very precarious period whereby if you do not be careful, don't take care of your money, you may be hit and you will know why. And this thing, when it come in, it could be years of downdraft. Okay. Now the Dow Jones is going to be, the Hang Seng will open soon. So I'm going to, as I promised you guys, I will now go to the Hang Seng. The last time somebody complains to me, say that, Kel, you did not put the Hang Seng daily chart anymore. I said, huh? Oh, okay. I mean, I'm doing this for free. I'm doing this because I really love you guys. Please don't keep on thinking that I have to do that, as I got commitment that I must do every single day. I realize that nowadays people are like telling me, Kel, you didn't do this, you didn't do that. I say, hey, I thought that I'm supposed to do this because I want to do it for you. Okay. All right. So, all right. Never mind. It's okay. Let me just plug on my chart first. Okay, I'll put my template. Okay, this is the Hang Seng right now. This is Hang Seng long-term chart. Okay, Hang Seng today, the MA30 will be the key pivotal level to watch out for Hang Seng, because Hang Seng today, the pivotal point is about 29,500. Right, I realized that recently that the last 3 digits of the Hang Seng and the Dow seemingly very close by each other. Not too sure why, but it's just that they are so close. All right, it's almost like mechanical. Whenever the Hang Seng move, the Dow will move. The Dow move, the Hang Seng will move. And the last 3 numbers is so, as if they are like brothers and sisters like that. Okay, anyway, for Hang Seng itself today is still below the MA30, so I'm not really keen to look in the buy side. But for Hang Seng today, the MA30 is at 29,500 level. So if Hang Seng can cross 29,500, of course, the Hang Seng will still relatively go on up, right? But the Hang Seng, if couldn't go above 29,500, then traders do expect some form of profit taking coming in, okay? Now, the MA200 is 27,000 level, so it's very far away, so no need to concern for, okay? Hang Seng will be going live very soon. Okay, in about 50 seconds time. Okay, so you got the idea now for the technical side for Hang Seng on the conventional. Let's look at the non-conventional, which is our system. Okay, Hang Seng gonna open in about 20 seconds time. Let me stand by. Okay, now we have a few technical points to watch out for. KCB at 525, 529, 598 level. So Hang Seng, I believe that there will be some movement there. Now today Hang Seng is a CCRY. So Hang Seng traders, if you look at to buy Hang Seng, you consider looking at that. But the KSI is red lah. The KSI is red. But that's for your information. Hang Seng yesterday closed slightly above the RL. So yes, today Hang Seng to go up higher is a high possibility. Okay, Hang Seng to go up higher a bit is higher possibility. Hang Seng is to start opening right now. Hang Seng has opened, gap up. Hang Seng has gap up. Okay, yesterday Hang Seng closed at 29,421. Hang Seng gap out to 29,521. Interestingly, the opening price and the high is the same level, but I think the market is trying to recover back now. Hang Seng gap up by 70 points. And Hang Seng now is trying its best to stay above the OP if it's possible. If you go above OP, I believe there'll be some buying. Hang Seng opening price is actually between the two pivot 1 and pivot 2. So it's pretty natural to say that if the Hang Seng wrong color. If the Hang Seng basically stays above OP, then Hang Seng will be going towards the pivot 1, and that is 29,609. Okay, white color. Okay, that will be the target for Hang Seng if it stays above the OP. But if Hang Seng go down, then Hang Seng itself should be going towards the MLP of the Hang Seng. So MLP is about 29,000 level. Okay, not drawn to scale. I didn't draw it out, so it's roughly there. So about 500 points. So not that possible, at least for now. But again, anything is possible. But the KSI is red in color, so the market will be biased towards the sell side. All right, so traders, just take note of that. The market will be biased to the sell side, but now Hang Seng is already slightly above OP. So that means that Hang Seng should be going a bit higher for the time being right now. Okay, so Hang Seng traders, just watch out for today. Right, KSI is red, so be more biased to the upside. So KTR +1 to KTR +3 traders, please do take some profit over there. Okay, so that is Hang Seng for you this morning. Okay, so very, very clear explanation, right? Okay, so that is the Hang Seng explanation. Let's go back to the fundamentals. So this is the Wilshire 5,000 over GNP. But of course, again, this is something that I want to share with you. Okay, this is the VIX indicator. Now, we all know that VIX was created back in 2000. When was that? I think 08 or 7. I can't remember which year was it created. If anybody don't, let me know. So it's supposed to tell you that when the VIX is at the low end, market is cool, no worries. But if it's a high end, be careful. The market will go into a point that you must be very careful, right? So where were we back then in 2009? The VIX indicator went to 63, and that was a great time because when the panic is at all-time high, you should be jumping in. So next time you see the VIX indicator go to 63, rather than you sell a portfolio, you should buy, and keep it for a long, long while, okay? Because it happened again, yes. Apparently during the March crisis, during the COVID-19 crisis, right? Remember that, the subversive crisis? Apparently itself, the indicator went to 57. It did not hit 63, but it was good enough. 57 is good. So if again in March 2020, you buy, wow, now you are very rich, okay? So I'm going to just give you an upside thing, okay? Because everyone say, Kel, you only talk about the downside. No, I'm telling you upside today, okay? If ever the VIX indicator go past 50, okay, don't be only 57, 50, okay, if ever the indicator go to 50 and beyond, 55, 53, whatever, just buy, okay? Anything above 50, okay, anything above 50, just buy, okay? Buy whatever you want, but of course you buy the good ones, the value stocks, or you buy the bank shares because they're the safest during those crises, okay? So at least today, I don't tell you about sell side. I'll tell you what to do on the buy side. But of course, we should be doing it when the market basically are getting out. When it's getting out itself, the indicator called the VIX indicator, you see on the mainstream media telling you now is at 50 and higher. That's it, man. Open your valve and buy. But do note itself, it will take a while before the market recover. Usually takes about months before we see first recovery, but then again, you have bought at very low prices. Okay, cool. You like that? If you like that, please key the word cool, COOL or KOOL, depending how you want to spell that. Okay. All right. At least not every time I talk about bad, about market down. You know, sometimes you say, Kel, you always have on downside. You never talk about upside market. Yeah, no, I don't tell you. It's just that because there's nothing much to tell you. Now I can tell you, right? If the market really reacts in that manner that I said so, then of course the VIX indicator will shoot up to 50s or 60s, right? Then that is a good time to buy. Oh, that time you should buy a lot. Okay. So this is the thing here. So I'm preparing you guys. Obviously, you may say, Kel, why are you doing all this? I'm preparing you guys. I'm preparing you because I really want you guys to benefit out of this, okay? Seriously, so I believe in 6 to 9 months or so, we're going to see lots of great stuff. And if you're in the right position, you're going to make so much money and beyond. But if you're in the wrong position, then you'll be crying because this could be the very point of a cyclical top. And if you have buy at the top, you need to suffer for many months or even years, okay? That's the reason why am I doing this today, okay? I'm doing this because I want to help you as a friend, okay? But of course, if you get it wrong, then okay lah, never mind. Okay, all right. So let's go through now the Dow Jones and let's look at what happened last night. Dow Jones basically went up from this 32,200, went all the way to 32,600 level. It hangs around there, and there's some form of distribution actually in the market, some form of distribution. And again, in the last 2 hours, there was some profit taking. But the point is this, I thought that the market was supposed to be buying up because the stimulus package was out, right? So apparently now the market seems to be selling on news. So I'm not too sure whether I'll be right, but I would rather play the devil advocate here, okay? So S&P 500 jumps by 1%. So the previous day was NASDAQ, then the next day was Dow Jones, today S&P. You notice there's a lot of rotational play among three of them. And when you see market do rotational play, it's very clear someone is hiding the tracks of the other. And that is why, again, when I see this in my diary, my trading journal, I know that when I see rotational play, again, at the peak level, I know that this is time to do something like this today. Okay? This is why I'm telling you all this. There's a rational reason why this morning I spent so much time to do all this for you, because I really care for you and I want you to take care of yourself, okay? All right, so what happened is that yesterday, Tesla popped by 4.7%. Not too sure what went up again, but doesn't matter. Okay, Apple, Facebook, Alphabet, Netflix all went up by 3%. So it seems to be every other day is all right. It's very simple to just buy the tech shares now. So the thing is, the Dow Jones up by 188, and of course the NASDAQ went up by 2.5%. And of course, now with so much money coming into the system, the market believes that now the market will go even higher. Let me just say this up front, okay? The COVID-19 1.9 trillion package was mentioned back when the Dow Jones was at 31,000. Okay, now it's 32,500, which means that the market has already priced in 1,500 points for this. So the thing is, at this moment now, if you think that, okay, because of the 1.9 coming in and you jump in right now, okay, then you know my point already. So there's a point you must understand. The market noticed about this. There was first talk when the Dow was at 31,000, and Wall Street always buy ahead of time. They don't buy when it reacts. So the thing is that from 31,000 now it's 32,500 already priced in. So of course some will say that no, we go to 33,000, 35,000. Okay, I beg to differ, but I will not argue. Okay. So the news is that now all the mainstream media said, okay, US stocks has done the good job. Now Asia stocks going to go higher. Okay, question mark, question mark, question mark. So all I can tell you is this: today, watch the opening price of all the indices. If the indices stays above opening price of today, no problem. The Dow will go higher or whatever index will go higher. But if the market stays below OP, likely the market is actually now selling upon confirmation of news. And we always seen that before. When the market sells on news, it can be quite surprising, okay? So let's just recap what happened on yesterday's Dow Jones. It's always what we do. Now, the opening price of Dow Jones is between the two pivot level, right? And the KSI was green in color. It was green in color. Okay, so the market is buoyant towards the upside. So naturally, it's all right. When the market comes down, okay, if we go to KTR -1 and do a CCRY, it'll be a buy instead. Now, if the market goes up above OP, then naturally it should be going towards the pivot, which is very nearby, right? Because I told you before, when the market is near to the if the opening price is near the pivot 1, very high chance the market will go to pivot 1. I said this many times, especially if the KSI is actually supporting it. So tip of the day number 3, remember, if the market is opening price is very near to one on the pivot, check the KSI. If the KSI is actually in line with that the particular direction, example, if the market opening price is near pivot 1 and the market now trades above OP, then because the KSI and the opening price where it was situated, then the high chance of the market go to pivot 1 is there. But of course, it has to be near, okay? How near is really in relative, like you have to see for yourself, okay? There's no percentage, but this is the tip of the day. So obviously, same thing. If the market opening price is near pivot 2, okay, near, and of course the KSI is red, then naturally if the market breaks OP, the market going down to pivot 2 is there. So yesterday when the Dow was going up, I immediately tell you guys likely the Dow will go to pivot 1. And indeed, it really happened. You see that? So what did the market tell you? Now, there's a few things. Number 1 is, all right, the Dow purposely touched the OP first. So it did a touch OP, and then a very strong reversal came in from the OP point. And of course, after that, it surged towards the pivot 1 level. You can see that, right? So this touch OP here, you can see the market was just waiting to bounce. And of course, after that, it really went up. So where is the turning point, or where is the main point? Watch out for here, my friends. This is the point. Do you see that? This is a BNB here. This yellow bar was a BNB. And you look carefully, if you draw the BNB, you draw the 2 lines over, you can see that why the market basically bounces here. And then after that, stage a rebound from there, and that was a cue for you to buy. And if you've done that, that's all right. You target yourself to take profit at P1. Well, that is a walk in the park. Within 2 hours, you have already made money. So all this can tell you that actually our technique, right? If there's a lot of little tips inside there, as long as you spotted it, that's all right. You can make money out of it. Okay, so tomorrow, Saturday, there will be this revision class whereby I'll be hosting about 30 students, right, in a very nice hotel in Orchard. I will go through this again with a lot of example because I know that most of you guys already went through the revision and you want to do something new, right? So tomorrow, a lot of tips. Yes, tomorrow, a lot of tips will be given out on how to use the TWB system even better. Okay, so tomorrow, guys, I'll see you. All right, don't stay up late today. Stay fresh. Tomorrow I'll see you. Okay. All right. So that is the Dow to check now. Let's look at the market, shall we? Okay. Hang Seng has dropped below opening price as some of I expected that. So okay. So traders, let's take note. All right. So let's go through the motion and go through all the technical side first once again. All right, now Dow has went up higher and obviously it has breached past my technical trend line already very significantly. So I need to redraw this, okay? I need to redraw this. So I'm gonna do it live for you guys now. Okay, I'm gonna redraw everything because now it's really doesn't really need it anymore. I'm gonna redraw this live so that, you know, it makes more sense. Okay, I'll take this away. So how to draw this live in my personal perspective, I'm doing it fresh because this is just a morning. Let me take a look at the chart. Okay, I think I got an idea now. Let's see whether can I curve fit the chart for you guys. Curve fit. Curve fit means that I want to purposely make it as if that you must listen to me, listen to my abiding. Okay, so I can just curve fit the chart. Okay, let me just curve fit a bit. Here we go. Yeah, you see that? Okay, curve fit. Oh, wow. Okay. Okay, if I'm gonna curve fit this to make it as perfect as possible, just to sell you the koyok, right? Sell you the medicine. I think something like that. You see that? Wow, I have predicted the high. Yes. Okay, so guys, what is happening right here? I basically curve fit the chart to put the chart to perspective. Okay, which means that I draw this from this point here. I connected with this guy here, and incredibly, oh gosh, I have predicted the high yesterday. Okay, yesterday about 32,600, a friend of mine contacted me and said, Kel, what do you do at this stage? I say sell. Okay, my friend said, what? You should be buying, right? I say sell. Okay, I say, then where you get this number from? I say, I don't know. I just tell you sell. Okay, that was what I tell my friend. I'm not kidding you. Okay, I get my friend to take his orders in later. So is it because that I saw this? No, I did not draw this line. As you can see, I'm doing live for the first time. Okay, but it's just as a trader for some years. So you just have this very inclination of how things will happen. And apparently 32.5 was a figure, but I know that the market purposely go and jab the market to 32.6. And of course, now you can see the trend line approaching that. Now for today, the MA30 is 31,650. So it's pretty far away. So no need of concern. But if you notice, I got two more lines at the back, right? Why are they there? Because I want to show you the longitude chart. Okay, let's take a look here. So what happened is that I draw this back then, right, to show you how they draw the trend line. And of course, after that, I do another parallel at the bottom. And that gave me the turning point with the MA breaking it. So of course, if I have a new line, by right, I have another one later on. Okay, so I will do it later on myself, and I'll just I'll show you again, because this one needs to be a bit more skewed to look at the market and always on MAO. All right, but by Monday MAO, you should be able to see this. Okay, so guys, this is my view at the moment. Now you can see something very critical. I want to share this with you. Okay, I'll share this with you. Do you notice that this is MA30 and this is MA200, right? Okay, now what I share, I think a lot of TA guys also share this with you. When the MA200 and the two MAs, one the shorter one, one's a longer one. If the two MAs, right, the divergence is getting wider and wider, right, opening up like a crocodile mouth, right, you must be careful. So apparently, do you notice that this two is getting also wide? Yeah, and indeed, in terms of magnitude itself, right, I think the current magnitude is even wider than the one earlier. So that is the reason why I also want you to be very careful, okay? Something like that, you got my point. Because the last time when this actually happened, do you notice this? Yes, you notice that? When the last time when this happened, the Dow Jones pulled below the MA30, right? The market actually go down to MA200. So would this actually happen? Would this actually happen? So of course, I'm again playing the devil advocate here. I'm going to put it back in for you, okay? Now this MA200 now is at 29,800. 29,800. Okay, and apparently it's all right. Again, I did not do this chart in advance, right? But I want to show you something incredible, okay? Very incredible. I'm going to do it live right now. Okay, live right now. I go to Facebook, and then after that, I will go to Trade with the Boys. Okay, and I go Trade with the Boys. And if you actually look at one article that I do it yesterday, I wrote a pretty long article yesterday, right? I actually put a figure there, 30,831. Now, obviously, this one, you all know what is this figure, right? This figure is actually based on the previous day all-time high level to compute the 5%. But of course, with the new all-time high, we will change the number again. But at least you will notice this now, that the figure I mentioned was 30,831. But if you look carefully in terms of this MA, the difference, the divergence, right, I believe is 29,800. Of course, this figure is based on today. As the days goes by, the number will change. Obviously, it may move higher. So if we move higher, plus minus, we may see something about the 5% level. Okay, so guys, do your own stuff today. Today, you can see I'm in a very good mood to share with all this thing to you. A friend of mine was joking and said, Kel, when the market is down, you appear to be in a happier mood. When the market is up, you don't look happy. I think that is a bit of BS here because today the market's up, right? You see, my mood is still good. So please do not try to, conflict me, all right? It's not like that. Okay, so that is the Dow Jones. So long-term chart itself, I'm going to stick to my principle. I still believe that there will be a very big turnover and on the April the 30th. So I'm not going to change my words. I'm going to just see the Dow Jones for a while. This is the long-term chart, seemingly still okay. The weekly chart is still moving fine, so I won't change anything until next week. So next Monday, I will tell you how I see the market in terms of the weekly chart. Okay, so let's do today's daily chart now for the TWB system. Oh, Hang Seng has traded lower. Hang Seng is down to 29,420 plus level. So I already told you guys, because the KSI is red and there's a KCB on top, right? Might be some selling, okay? Might be some selling, and it's really, really happening. All right, so do your thing now. Okay, let's look at the 5-minute chart quickly now, might as well. Okay, Hang Seng has just flipped to red color potentially. That is a TSCB intraday circuit breaker level around here, and that is where the market is holding now at 29,415. Okay, so I'm going to quote it right here, right now, live. If the Hang Seng do come down with CCYR, then Hang Seng may test 29,332. Okay, may test. Why do I say that? Because the KSI now is red in color, and I have a TSCB level at 29,415, and it purposely tests it, and now it seems to be testing it live coming right now. So if the market do pull down here, sorry, oh gosh, okay, I suspect that the market will go down all the way to 29,332 level. Okay, so at least I give you the figure for trading. So traders, if you think that you want to jump into this, just watch out. All right, but of course, this you must use the system to trade. Okay. Okay, so that is the Hang Seng, and now look at the Dow Jones. Sorry, today the diver. Okay, Hang Seng. I'm talking about Dow Jones. Okay, now Dow Jones today, very interesting. Okay, very interesting. Today the Dow Jones opening price is actually very near the P2, but the opening price is below P2 this time. So all I can tell you is this: the Dow Jones by right should be going up above. If it goes above OP, it will go up, and indeed it will go to the pivot 2, which actually really happened already. All right, but because the KSI is red in color, so that means that there is a lot of resistance on top, right? I'm going to quote it up front. If the market can stay above pivot 1, the market will still go up. But then again, when it hit the KTR +1 to +3 level, traders, please take some profit along the way. But if the market breach below, OP, then it will be a sell. Okay, it will be a sell. So I'm going to say up front here, if the market breach below OP, then it will be a sell. Sell to where? Well, at least safely about the cash RL level. The cash RL level. The cash RL level is 32,382. 382. But before you go into a crazy mode, before you do that, there's something I need to warn you first. Now, yesterday, the Dow Jones actually crossed above the cash RL level, okay, above the RL level. and stay above, right? So like mathematically, based on the statistics, the Dow will have to go higher and reach an all-time high. All right, because of closing above RL. All right, so 90% of the time when this happens, the market closing above RL the first time, usually the Dow will go, the market will reach a previous day high. But there's also a 10% where it doesn't happen because apparently itself that is near the peak of the market. The 10% mark is our peak. So I will say that I'll give myself option here. If the market goes back above the pivot 2 level, I believe the Dow will purposely test the high level again. All right. But only if the market breach below OP, then the market will sell down. And I say my first level that I'll put it in will be this level, that is 32,382. But of course, maybe after that, the market may again strongly rebound. Okay, so this is one thing that I want traders to take a look. Let me just confirm the price here. Looks a bit off here though. Yeah, correct, 382. Okay, all right, settled. Okay, that is the Dow for today. Okay, for the NASDAQ wise, as I told you guys, I'm actually pretty worried on the NASDAQ, but apparently, right, you can see NASDAQ has its mind on its own. So rather than go down, the doji yesterday was there. We initially thought that the market would be going down, but instead it went up. So I was wrong. Apologize on that. See, thing is this, when you're wrong, you apologize. No need to change around and tell you another thing. So what happened is that yesterday when the NASDAQ breached above MLP, that was the first sign of trouble. For those who are short selling the market, you should be closing a position. Then after that, the market went all the way up. Okay, so now for today, the MLP will be somewhere around here. And of course, trader watch out for. Now, I want to share something with you on the technical side, okay? Now, normally technical traders, they will draw something like this, okay? Whereby when the market is on a downtrend, what you do is that they construct from the top to the top. And you notice that that was whereby the market basically was resisted yesterday. So now the market crossed above it. So likely the Dow should be going, and the NASDAQ should be going higher, right? So I'm going to add a few more information for you before you go into that. If the NASDAQ stay above OP, yes, indeed, the NASDAQ will go much higher. But I'll quote that if the NASDAQ break below here, which is happened to be in the intersection of the MLP and this trend line. Apparently, it's all right. If the NASDAQ go below 12,900 level, I believe that the NASDAQ will come off. Okay, so I can tell you up front here again, if the market stays above OP, the NASDAQ will be going higher. But if the NASDAQ goes below the 12,900 level, there should be further selling. Okay, so you got my view on the market because the MLP and the trend line happen to cross-check each other, and the particular point of intersection looks to be about 12,921. So we give you a buffer, we give to 12,900 level. Okay, so traders, this is my little sharing on the NASDAQ with you, okay? So I hope that today you can watch this and know what to do with all the tech shares if it really, really happens. Okay, that is the NASDAQ for you. Okay, done. All right, so let's just look at gold. Okay, gold now. Gold, guys. Okay, how many of you are still bullish in gold right now? If yes, keep bullish, okay? I want to see how many of you are still bullish in gold, okay? If you're bullish in gold, please key BULLISH, bullish, okay, into the group chat. All right, thank you for your bullishness, okay? Now, the thing is this is what happened for the gold yesterday, the whole entire day movement. So initially, it went up to 1737, and then after that, it went all the way down to 1717 area and rebounded, right? Remember the 1717 area that I told you guys is a very significant level. We talk about that later. So the thing is this, a lot of people are bullish, right? You can see now, wow, Michael and Colleen, sorry, I can't pronounce the Chinese word, sorry about that. Dennis, Peter, bullish. Okay, now it's totally correct to be bullish at this point right now, right? Because the dollar is coming off. But hang on, please hold on until the last part of today's MAO because I've got some fundamental thing to talk to you about gold. Okay, now this is the long-term chart on gold. Now let me explain to you why I bring this in today. Okay, let me explain this to you. Now, if you look at the gold in terms of trading, right? This is the area of, sorry. This is the area of consolidation that was gold back then, right? There was gold back in April last year, where gold was consolidating about between 1,700, 1680 to about 1780. Then after that, when it broke above it, right, it went to much higher to 2,000, right? So I want you to draw something like this. You see, if I draw something like this now, right, basically this is the support level, right? If I extend it down, can you see it now? Wow, okay. Don't you find that it's incredible? Yes, a lot of things in life is that, right? You like it or not, right? It does has its reason there. Now, the reason why the market actually responded recently, right, is because we actually took the high here and we do the Fibonacci, right? We did the Fibonacci at 61.8, right? We did a 61.8 Fibonacci, and the number given to us was 1689, right? That was the Fibonacci level. But now if I take the consolidation period back in April to June, it seemed to have the same level. Wow, you see that? Incredible, right? Really, I haven't drawn this now. I'm doing live right now. But just that when I saw the chart, I know that likely it will happen. So I did not prepare this. I just know that it will happen. And now I want to show you something here. This was a previous low. And you can see that that previous low will hit around 1600. Then the last low, if you look at it now, was here. And that was about 1450. Now, I'm not saying that gold will go down to those levels, but definitely there are something that you must take note. Now, what is something? You know, like chocolate bar, right? How it works. Because from here to here, you can see that it's one-way traffic up. So which means that how the market goes up, we all know is how the market comes down. Not always, but most of the time. So if you look at itself, right, then if that is whereby gold may be supported at only a 1600 level. But of course, we know that 1689 to 1600 level, these are the two range. So obviously now, I think you know my mind already, right? What will I do? I'll take the difference between 1689 to 1600, I divide by 2, I get a number. What number do I get? So the difference is about 90 lah. 90 by 2 is 45. So 1645 is the midpoint between these two range. So 1645 is very near to what we have, right, in the mathematics is 1659. 1659, if you don't know what is this number is actually the minus 20% from the high of the all-time high level. So with that itself, right, I can roughly tell you now the three levels that I will be looking for gold to buy in the near term. 1659, 1645, and 1600. Three numbers for you. All right, of course, 1689 you can buy to punt, but this 61.8 Fibo number is based on how we draw it, right? So may not be accurate, but the next three numbers is more on technical and mathematics. These are the three numbers. So these three numbers are given to you, right? I'm not saying that the market will go there, but at least I'm telling you guys, you can consider to put something over there itself, okay? So three levels have been given to you, 1659, 1645, and 1600. Of course, straight away, some of you say, Kel, what if it goes even lower to 1480? Is it even possible? Well, it is actually possible if you actually hold back to the last part of today's MAO. All right, I'm not saying that you will go there, but it's possible. So if you want to know why do I quote this number here, please stay on until to the end of this MAO. There's one part that's what Federal Reserve say there's a big concern, and that's the reason why you need to learn today's you need to stay on, right? I will finish the MAO by about 10 a.m. because I need to rush also. So okay, so stay on a little bit longer. Okay, if you're in a rush, you can watch the replay later. Okay, so why do I want to say that? I'll come to that later. So let's just continue our MAO first. So now the from business time say that gold is falling as equity market hedges. Equity hedge, says that there's a fake headwinds coming in. Then also we have the gold prices analysis. They say that because gold rejected 1740 now, it will be back to 1720, and because the yield rally from the low, and that's the reason because of that. And they'll tell you that now because the yields went up, that's why gold fell. So take notice of this, the yields goes up, the gold came off. So this is something that you can see is from business times of Singapore production. So obviously we have to trust a bit more. There's a more, meat to this. Okay. All right. Okay. You may borrow arrow now. Okay. So let me explain this to you guys. What do I mean then? Okay. But just recap first of what happened yesterday. Now, yesterday gold opens at between the two pivot, right? So basically, it is opening nearer to pivot 1. So I repeat myself, it's simple, right? If you goes up above OP, jolly well, it'll be attracted by pivot 1 and it'll go to 1732, which the high was 1739. So you see, our system is so powerful. If it opens near the pivot, likely will go there. You see that like a magnet, and it seems to happen most of the time. And of course, the thing is that because I told you the KSI was red in color and there's blue bar at the bottom, right? No good. If the market go to KTR plus 1 to KTR plus 3 level, if there's a CCYR, then naturally gold will come down. So the thing is, people got confused that, Kel, wait a minute, the day chart is CCRY is a buy and you bought actually. Then why are you selling gold? Because I say that the KSI is red. So if the market goes to KTR plus 1 to plus 3 intraday, I can sell gold. But the day chart, if I buy gold for longer term, I can still buy gold and keep. So there's a difference between long term and short term. So intraday short is obviously short term, right? Buying for the keep is longer term. So let's see what happened yesterday. You see incredible, right? Gold prices went up all the way from OP. And after that, you can see how I do. Let me just go through this slowly with you guys. So first of all, there's a BNB right here. There's a BNB right here, followed by a CCRY. That's why gold went up. So this is the first leg, it went up. Then after that, if you notice this, there's another BNB right here. And then the CCRY come in, and it's a CCRY above OP, above pivot 1. What must you do? There's only one thing to do. Buy, 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 buy. Then when you go up itself, right, the market missed the KTR plus 2 by a few dollars. But if you notice this, there's a BNB again happening right here. And unfortunately, it's a BNB. You know that if the market bridges below the SL level, the BNB, then of course they'll be selling. And after that, you can see gold really crash down all the way to KTR minus 1, as if that the market knows. Because see, the market opening price was here, the KTR was there. How would the market know that there's a KTR level to be involved? And apparently you see the market, when it came off, right, it stopped perfectly at 1719 level. So guys, we really have a very powerful system that really untouched or really hardly, used. If you actually put all this into the system and trust on it, right, wow, it's really beyond, because all these numbers are automatically drawn for you as early as 7 a.m. in the morning, and you don't even need to do anything. You just had to plug and play. I mean, you just had to follow, right? Incredible indeed, right? Is it powerful system? Indeed, right? If you think it's powerful, please key the word powerful into the group chat. POWERFUL. All right. If you think that this system is powerful, please key powerful. I want to see many people saying powerful, because if you think it's powerful, why not give me that, validation on that, okay? Okay, if you think it's powerful, please key it in right now, okay? All right, so let's look at the market right now, okay, for the gold market. Okay, so for the gold market, here we go. Okay, for gold market, right, you can see that, why is line over there? Okay, the MLP, yesterday gold came down to MLP and then stayed beyond. That was what happened. Right, thank you guys. Thank you so much for your validation here. Thank you so much. Okay, so what happened is that the MA today for gold is at 1751. For MLP for today is very close by. It's about 1724, 1724. Okay, and okay, so that will be the MLP to watch out for today. Now, yesterday you can see that the gold pulls up, pull back now, so not very nice, right? So traders, just be careful, okay? The MA 200 obviously is even further away, okay? So that's why we don't need to talk about that. So overall, it's still pretty bearish on the side, actually. The weekly chart itself, right, we can see that as long as the gold stays above the 1689, there's still a very strong support here in the market, okay? So no need to concern. But if the market breaks 1689, then I think that you must be careful, because the next technical level is 1659 level. Okay, so traders, watch out for that. And of course, silver yesterday has also tried to go past, but yesterday silver broke my trend line and then closed below it. So I can say that silver may be coming down a little bit lower to the MA 30. Okay, so I'm going to quote it right now. I believe that silver should be going down lower if gold come down, right? If gold come down, silver to drop back to MA 30, sorry, MA 200 is pretty high, $25.38 for silver traders. Okay. So of course, someone asked me that if gold price really go down to 1659, then where will silver go? I already tell you, right, the figure is about $23.50. I believe that if the gold price come down to 1659, then silver will be going down to 23.50. So will that be a good time to buy silver? Well, as long gold stays above 1659 back then of course you can buy silver. Okay, so this is something that I'm looking out for. I'm also talking to Ames right now regarding about silver, and we might able to roll it out soon. Okay, I'm doing all my best for all of you guys. Okay. All right, look at gold today's now. Now today gold a little bit tougher because now today opening price of gold is exactly in the middle of the two pivot. So since in the middle of two pivot, right, that means that it can go up, it can go down, right? So that's really not easy to give you any idea. But because the KSI is red in color, so I can tell you only this: if the gold price stays below OP, then go down to 1705, it is possible, okay? But if gold stays above OP, right, we're seeing now, right, gold may actually test 1848. So watch out for gold, but do note there is a strong KCB level at 1738 level around there, okay? Very strong, okay? Very strong. And of course, we have a very strong support level at 1717. Where it's coming from? This from the TSCB. Okay, this time I remember this already. The 1717 is from the TSCB, which means that this is a support. Now, we can see that on 2 days ago, the market crossed above it. That's why the market is staying positive right now. But if the market bridges the 1717 level, then usually there will be some selling. Okay, so guys, at least I tell you that what to take note of for today's gold trading. Now, today is Friday, so maybe the market will be slow. Not too sure what that be, but okay. The levels are all mentioned to you. So you guys just take notice of what you can do for the market, okay? All right, so that will be gold for you. And last one is the crude oil. Last one, crude oil. Okay, crude oil is still surging higher, so no stopping on crude oil. So you don't need to worry about crude oil. As long as stay about MLP for today, crude oil should be still doing fine. Okay, now we are done with that. Wow, Bitcoin, 4 wins out of 4 trade, and Bitcoin today breached $58,000. Okay, guys, look at my trading strategy. It's really incredible, guys. You see, all you need to do is when the KCX indicator turns to green, you just stand by. Then standby means you wait. You wait until the color change comes to you, and one that is a usable trade. This one cannot trade because it didn't cross above OP. It's a usable trade, stop loss just placed in mind, and that's it. Now, 3 ticks means that I am telling you can make as much as $800 and above. 2 ticks is $500, and 1 tick is about $300. So you can see that, oh my God, look at how Bitcoin give you profits in just a few hours. Then after that, if you miss the trade again, you waited for it, and then you come back in, you call for the buy. So this trade, oh, sorry, there's a loss here. I'm so sorry. There's a loss here. It's also, it should be, wait a minute, 4 wins. Oh, sorry. 4 wins out of 5 trades. Okay, I'll just cancel it away. All right, so this one's a loss. Sorry, I missed it. The second one was a win. Okay, but the second win only make about $500, so only 2 ticks. Then after that, there is another KCX later on. You can see over here. And of course, that is the one that gives you a 2 ticks profit. So there are results, right? So that's why I say it's a 48% system. It's not a 100% system. A friend of mine told me that in the market there's 100% system. Then I said, how you do that? He said that the guy just buy, okay, from the low end, okay, and stop loss itself is $2,000. I said, huh? Serious? But if it's 2,000, right, 2 months ago when the Bitcoin came down, right, then it will have breach, right? He said, oh, that time itself, he says that this stop loss must widen to how much? 5,000. I say ridiculous. I mean, this is really nonsense stuff. If you have to do also widening, then that is not a system ready. But of course, people bought into that and they think that that was correct. So, okay lah. Anyway, now the Bitcoin is at 58,000. There's nothing much to say who's right, who's wrong, right? Because justifiable already. Okay, let's look at Bitcoin before we go into our special sharing. Okay, Bitcoin. Let me go. Bitcoin. Okay, so for Bitcoin today, Bitcoin opening price is also right near the middle, so it's a little bit nearer to pivot 1. So I'm going to play this. I'm going to say up front, okay? Today opening price is here, and the KSI is green. There is no blue bar at the bottom. So I'm going to say this. If Bitcoin later on stays above OP, then Bitcoin will go up to 59,000 340. So which means that we are talking about all-time high. The last time the high was 58,247. So if later on Bitcoin do go above OP, Bitcoin has the potential to go to 59,340 for today. Now this is only for today. It cannot be used for tomorrow, because tomorrow the new pivot is there. You can follow through. Okay. So I'm going to say this up front. With the KSI is green and no blue bar at the bottom, now it's some intermittent pullback that's expected. But because you look at it, right, the cash RL is there. So if the market break above OP, right, then the Bitcoin to go to 59,340 is highly possible. Huh? Oh, Hang Seng has hit KTR -2 already. Wow, really? Let me take a look. Hang Seng. Wow, Hang Seng has came off. Oh gosh, congratulations. Well done, guys. Woohoo! Right, remember earlier we talked about Hang Seng going out to this KTR -2, and Hang Seng really did it after there's a CCYR, and because he breached this TSCB level, and also combined with KTR -1. That's it. Hang Seng came down and immediately profit is given. Congratulations to all of you. Those who have made money today, well done. You have made me proud. All right. Good job. Okay. Very good. So you can see that all this is live. You can see no one can really do this so live with so many people online. Isn't it incredible? All right. This is the system, guys. You just have to do it, right? You just have to follow it. Really incredible. Come on, give me all the love, guys. If you have made money, give me all the love. I need all the love from you guys. All right, if you have made money on this market, give me all the love, okay? Congratulations to all of you, right? Well done. Appreciate, well done. Okay. Okay, so that is the Bitcoin sharing and the rest of the stuff. Okay, now I'm gonna go into the special charts already. So guys, I finished my technical analysis. As I told you guys, I'll finish by 10 o'clock, and indeed it really happens. So now, okay, I give you 10 seconds time to just, lock off, and you can move on for the whole day. I'll tell you what to do. If you still want to stay on to know goal direction, fundamental, and stuff like that, stay on, okay? This part is even more important than the one in front. I'm not kidding you. But again, some people may not like it. They may think that, this is too unacceptable. Okay. All right, I give you some time. I just take a bit of break. Oh, it's not easy talking, and gosh. How many of you love MAO actually? If you love MAO, please keep love MAO, really. If you really love MAO, please keep love MAO. At least that will inspire me a little bit more. Really, I mean, every morning, 4 a.m., you wake up to do MAO. It's really incredible. Really, it's very incredible. It's not that easy, and definitely itself, right? It is a lot of hard work involved here, really. Okay, so if you love the MAO, please let me know. At least make me feel a bit happy. Okay, thank you, Lo. Thank you so much. All right, any more? Okay, wow, so many love. Okay, thank you. Wow, relentless. Okay, cool. I like that. Thank you, guys. Thank you so much. Okay, so now we're gonna do this. Okay, why do I want to talk about this second part of the day? Now, this is the thing here. This is the US Consumer Price Index. I went through quite deep to find this for you. Really can't find it on mainstream media. This is the CPI numbers since 2001. Okay, so the last 22 years. Okay, so basically for CPI numbers, right, all along itself, back then in the earlier 20, that was where the CPI numbers was at 4% to 6%. And of course, when it went high to 6%, that was whereby the Lehman crisis happened and the market collapsed over there. So now why the Federal Reserve are saying that we're still at a pretty good level, because the consumer price rate now is about 1.4 to 1.5. It's nothing to worry about, apparently, nothing to worry about. And even the best itself, right, is only up to 1.7. So that means that no matter how it is, they are looking at 1.7. Okay. So back then last year, the market was actually more towards deflation worry. That's why the US yield from 1.2 slammed all the way down to 0.5 level. So back then it's all right. People saying that the yield is so low until it's ridiculous to be buying bonds, but the bond market was buying up all the way back then because the yield come down, the bond prices goes up, right? So a lot of people bought the bonds because they were very worried last year. But apparently from August 2 years ago, but August last year, apparently it's all right, the bond market started to change, okay? The bond market started to take profit off the table and the yields started to move itself. And now you can see the movement of yields has went up to 1.57%, right? In fact, went on to 1.16%. So why am I saying all this? Now, this is very critical for the next two information for you. And I want you to do your own due diligence before you jump into this, okay? Now, this is the gold versus the 10-year yield. Okay, now this is very scary. Obviously, the blue color was the blue color one is the yield. Okay, the blue is the yield. The red, the yellow one is the gold prices. So in short, it's a very interesting inverse relationship between them. Inverse, huh? When the yields goes down, the gold goes up. When the yields goes up, the gold come down. So can you see that now? So obviously when the yield came down, that was where the gold went up. So now I think it's pretty clear what you think might be happening. This is something that has been spent over the last 20 years and apparently has been pretty accurate. So the point is this, okay? All right, there are some people will say that, but Cal, wait a minute, okay? Back then, the yield was also going up. The gold also went up. Well, there was a period like this, indeed. But of course, when the yield goes down, the gold went up. And then after that, you can see the intersection here. So there were periods of time it didn't really follow. But you can see at this moment right now, it is actually happening. So if you think that the interest rates will be going higher because of the inflationary process here itself, right? Then of course, traders, you need to be very careful that the market could be actually going down further for the gold market. That is the reason why I want to tell you this. And of course, it's not just because of charts, there's some fundamental into this. Now, recently, Jerome Powell speaks about the 10-year yield, right? And these are the main thing that is very important. Please take note. Speed of rate rise is notable. It caught my attention by Jerome Powell. It'll take some time for it to achieve substantial further progress. Okay, that's what he mentioned. And the Federal won't hike just because the labor market is strong. That's why the labor market on last Friday, on payroll was very strong. But Jerome Powell said all this, right? So, okay, this one we all know, right? But Jerome Powell says that in his own interview, he says that inflation is set to increase, but likely temporarily. And more important, he mentioned that, right, they will not do anything, okay? So what it's trying to say in summary is that inflation will remain low or transitory, okay? Meaning that it's just temporary. And this is very important. In short, he's saying that Federal Reserve, he said, that is my own interpretation, Federal Reserve will not buy the 10-year or 30-year, regardless how high the interest rate is going to be. So in other words, they are not going to do the YCC, which is the yield curve control. Now, because of this interpretation from us, and I believe a lot of us sees that, right? That's the reason why bond prices cannot go up. So you can see that the last few days, the yield been coming off, but after it hit a 1.450, it goes up again. Because when the Federal Reserve say that they're not going to do this, they're not going to do the yield curve control, that means they're not going to buy the bonds to do the averaging out. They're going to let it go. So with that is right, this spooked investors. Now think about this. If I'm an investor and you're not going to buy the bonds off my hand, then of course there's no reason to me to buy into that. And that because of that, that means that they will allow the interest rate to go a bit higher, right? Because that is what they think so, is transitory. So if the interest rate goes higher, then obviously the earlier pattern that I show you, right, which is this one here, you should know that gold might be going down further. So that is the reason why I want to tell you that since Federal Reserve, if you trust what he says, then obviously they're going to stick with their words. And if their words is say that they're going to buy, then the bond prices will go down lower. And that is because, and that will lead to the yield to go higher. And that is the reason why I'm not that comfortable to do too much gold buying. So in case of this, if the gold do have any CCYR trades, that's a good one, I would rather short the gold than buy. Of course, intermittently, they'll always rebound at technical level at 1689, 1660, and stuff like that. These are all the thing here. So of course, because of that, you can see that, right, with all the money coming in, but you can see that the last 3 months, the dollar index actually rose from 89.50 to 91. So if this is going to continue, right, I can tell you this, the dollar is going to go much higher. The dollar is going to go much higher. Now, of course, you may say, how about the 1.9 trillion? I told you before, it was already priced in. So when it was 1.9 trillion was mentioned, it was already here. This was where it priced in the 1.9 trillion news. But after that itself, the dollar still continued to go up, even though we know that the 1.9 trillion was coming up, right? But the dollar still climbs. So I'm going to quote you guys very simple. I believe that the dollar will go to as much as 93 to 94 figure in the next 3 to 6 month time. Okay, I'm saying that the next 3 to 6 month time, the dollar is going to go higher to 93 to 94 level. And now you understand why itself with ECB actually putting more money, I actually see euro coming down. See, now everything is wrapping up already, and why I say that gold, be careful on that. So if all this is really going to in place itself, right, then of course, then if you look at the chart here, this is why you can see now that, okay, wait a minute, let me pull back the chart first. This is what I'm saying first. Okay, sorry. On the front of this dollar index for the next 3 to 6 month time. And wait a minute, let me just screenshot this myself. Okay, then after that, oops. Okay, then after that, you see this is the S&P 500, Dow Jones, and NASDAQ. You can see why S&P 500 and the Dow Jones is going upside, more the upside, while the NASDAQ is coming down, because NASDAQ is actually a growth index. Growth index itself, right, is always very sensitive to interest rate. If interest rate is going up, usually the growth stocks, right, the tech shares usually will actually have some selling. So that's why now you can see a lot of funds going into the value stocks, and they're buying ahead of this. But of course, when everything goes crazy, when inflation go beyond, then interest rate hike comes in, yields goes up, then of course everybody will pull down together. But obviously the one that pull down faster will be NASDAQ. So that's the reason why am I covering more NASDAQ recently, because I believe that the NASDAQ will fall even greater in terms of magnitude if the interest rate goes up. And because of that itself, I told you before, when equity market fall, gold usually fall. So if all put it together itself, right, it does tell you that gold might be coming down even more in the weeks or months to come. Okay. So with that, thank you so much for today's MAO. I really appreciate that. Thank you for listening to me. All right, I have done for today's MAO. I hope that you guys will enjoy it. And of course, if you make money, congratulations. And I'll see you, those going for the class tomorrow. I will see you tomorrow. If not, Monday MAO, same time, same place. All right, guys, take care. Have a great day. Bye-bye.